Boom. We are alive, ladies and gentlemen. Thanks for joining us this evening. I just thought I'd go live and share some thoughts here just because of yesterday's video and some of my thoughts about our potential jump across the creek. So I thought this would be a fun time because we're kind of right on the edge and verge for everything. So it's always fun to watch that moment kind of take off. And it looks like we're right about there. So yesterday I talked about are we still waiting on 56K? This is a great question. Let's actually start here with Bitcoin. So look, this is just so much data on this screen. Yeah, Alex Krishner in the house as well. Nice, great to see you. I've been kind of focusing on other areas of the market. I think when you look at the market as a whole, it's a bit easier to tell its direction instead of just one asset. You try to look at all assets to get the clearest picture of what's going on. So I thought that's what we would do this evening. Just take a quick look at everything and where I think we are and what I'm going to do. So I thought it would help explaining to you why and where and kind of what I'm looking at. So yesterday, let's use Render as an example, which is actually on our screen right now. So Render had a lot of strength, and it's one of the ones that jumped up on our radar, mostly because I think the AI niche just has so much narrative potential right now. It's why not ride the hype train too, and lots of use cases too. So a little bit of both. When we look on the higher time frames, let's go back out to the daily so you can kind of see where this is. We've bounced right off the bottom of the bear claws trend for the daily. And if we look up top, a lot of the signals are actually kind of in a sell area. The stochastic RSI is oversold, RSI is getting into oversold, and MACD is crossed over. But this is also where things can kind of get the most bullish for something as well. So usually what I like to do is kind of scroll down through the time frames. Oh, you're not seeing the screen? Oh, thank you. Okay, sorry. Oh, it's stuck on liquefy. Classic. Okay, there we go. That should do it. Okay, okay, perfect. Yeah, I fixed it now. Thanks for the heads up on that one. I don't know why, but it'll freeze screens. But okay, so this is fetch right now. And what I'm going to do here is just kind of quickly roll through the same story. What we do is I've got all of these open on the 12-hour, so we can kind of get the same visual feeling of what it is I'm looking at. Now I've got all the RSIs open right now too, just to kind of give some data. So generally, when everything's peaking out like this is the best time to sell in the market. And the best time to buy is when everything's at the bottom. So it's kind of simple, right? When the daily or the 12-hour RSI, MACD, and stochastic RSI and price are all at lows, it's usually a pretty good time to get in with the least amount of risk. And when we're up here with the MAC or the stochastic RSI, and MACD all up above, that's generally the time to be exiting the market. But one of the deceiving things about RSI is as you get oversold, it can actually increase the volatility as well, because this is a limited supply and demand marketplace. This is it's called FOMO in the traditional the more degen markets. As FOMO sets in, people start buying the limited supply asset, and asset prices drive up very quickly before more distribution takes place. And the spring that kind of brought us here was one of the reasons why I'm most excited about this moment. But it's also a kind of a make or break moment for potential distribution as well. It's one of the trickiest things about reaccumulation ranges. It's always easier to spot an accumulation range. Just as an example, while we're going through some of this, it's always easier to spot an accumulation range than it is to spot a reaccumulation range. So one of the reasons why is because reaccumulation ranges give us a significant amount of data, right? Or time as well. So obviously what it took to get us here, we've got, actually, let's see if I can get this a little bit higher so I can see better. Let me know if it's still, okay, hopefully it still sounds okay. Let's get rid of all the RSI data. So remember, we've been in a few hundred day accumulation period, to 470 days to get to this period. We've had our first SOS backup phases, and the likelihood that this is kind of the finality of the bull market. Now, there is still some weakness here, and we could see a move lower, but I don't think that's the case right now, because again, if you look on the daily for Bitcoin, we are right kind of on the edge of the bands as well, and we couldn't close above. So generally, when you can't close above the creek, this is bearish. This is a bearish indicator. But what's most interesting, again, this is why understanding the difference between reaccumulation and distribution can be very deceiving, and it's quite difficult to do, as in comparison with recognizing the 500 days of accumulation at the bottom of the market cycle. These interim accumulations, reaccumulations, can be difficult because they can look exactly like distributions up until the last moment when you get that solid jump across the creek. And it's usually created by a few things. The VPVR here is usually kind of a strong indicator. I'm not sure why that didn't refresh. Okay, so here we go. So this range we've been following, the majority right now of the supply is down. It's down near 42,000. And a lot of the liquidation heat map is down at $30,000 as well. So even as we zoom out, you can kind of see the point of control. If I turn the bear claw off, it'll be a little easier to see too. You can see the point of control way down here at 17,000. But again, as we zoom in, you can see that point of control move up. And all that is showing you is where the majority of buying and selling last took place within the visible ranges that are on the screen right now. Why am I telling you all this? I'm trying to highlight right into the point where I think we're about to go. So I sent out a private newsletter a few days ago about us coming into this area of a test. I made the hypothesis that it would look something like an inverse head and shoulders, and effectively to be patient for that inverse head and shoulders to start to form. And here right now, again, the RSI on the daily is still oversold, or the stochastic is up at the oversold or overbought area, but the MACD is at the bottom, so is the money flow indicator. So I to reset one more time, because this is kind of like the final indicator for what that right shoulder might look like. But I wanted to look at render again, because render's actually, because it's been so strong with a 50% jump up off the bottom, it's completely jumped over its creek. It's stayed well above the ranges on multiple time frames. And the AI narrative is just so strong. Again, it's in the daily, the stochastic RSI has not reset, but as we scroll down, we can see, okay, the 12 hours still pointing down, but the 6 hour is fully reset. And this is where it starts to get a bit like, as we can tell, maybe we're kind of close to a bottom, or what might actually end up being a really small middle of the box reaccumulation range. And I'm really excited to see how this turns out, because we've seen something like this before in the very beginning, near October of 2023. And what it ends up being is a middle of the range reaccumulation range. It's this perfect explanation of why the idea of scale invariance is such an interesting phenomenon, because it's clear that it exists, right? You can't escape that. So as I zoom in, let's clear this chart here a little bit, because it's super messy. That's how you can tell we're late on in the market cycle. Look how messy that chart is. That's how difficult reaccumulations are to compare as in just accumulations. So what I'm kind of thinking is going to happen is we're going to see a really nice reaccumulation range here. Because if we don't and we start to break down again, we could come all the way back down to $7.80 for render. So I've got some cautious optimism here, because if we see this middle of the box reaccumulation, which is usually occurred after the jump of the creek and acts as part of the spring of this middle of the box reaccumulation, generally tends to act as the test of that creek. Now it can be extraordinarily volatile. Just as an example, let's look at what happened with Solana. When these jumps across the creek take place later on in the market like this, you can have extreme swings of volatility. And this will often wipe out high leverage positions, kind of on purpose. So let's go back just for a second. And if you would remember with me when we had this horizontal trading range, this was our spring, this was our jump across the creek and test. This was the first reaccumulation range after the jump across the creek and the test. Then you saw another head and shoulders, which was really interesting, head and shoulders, which failed into reaccumulation yet again, and then the final breakout. But this area, the backup phase, look how big this wick is. It's so easy to get wiped out if you're not in a position early enough in the sequence. Now, because we're so late in the market cycle, I also advise caution because let's use Avalanche as an example. Let's go back to the 12-hour. We'll go back way back here. It doesn't look like much, but as we zoom in, it'll start to paint a clearer picture. Let's hide the bear claw for a second. Yeah, so some of you will remember this moment too. This is November. This is when there's a perfect reaccumulation range for Avalanche. It was so sexy. It was, the spread was only like 20% too. Basically, you could enter anywhere here with 3x without any difficulty. But again, if you look after our spring and test, we had a huge sweep of liquidity. Now, I know it looks small, but this is 10%. If you're in a 10x leverage position, even coming out the creek here, let's say right here, you're getting liquidated on that position effectively, even if you're almost neutral in the range. So just be cautious. The jump across the creek is usually where I like to get in, but any forms of high leverage can get wiped out. And then the market maker usually does that on purpose to draw out that liquidity and take everything more into spot positions. It all, that's how they make their money. Okay, let's go back to render. So that's kind of what I think. I think render is actually going to be a great indicator if we get this nice horizontal trading range that takes place through here to jump above this next bar before taking off into a kind of an SOS phase. Because if not, if we start to see a failure of that line, it can come down significantly. So the same thing exists for Bitcoin right now, because this pattern can turn into distribution oh so quickly. It's very deceiving. I'm not perfect at these ones. They're much harder. I've never claimed to be I'm much better at being like, here's a market bottom, here's the structure with the bottom. It looks like we're moving away from the bottom. This stuff here is a little bit more difficult. But again, there is signs of diminishing supply, which is great, and an increase of this will actually be a great little lesson too. Okay, so this is one of the other bullish indicators, which is usually one of the most important in the Wyckoff method. Although this late in the game, I think it's easier to use like a stochastic RSI and MACD on the larger time frames. But nonetheless, right now, if we take into account all of the supply on the sell side that came in and the drawdown scope, let's grab which ones? Oh, there it is. Let's grab the arrow. Okay, so notice the supply, how in dark blue for sell and buy for like teal green here, basically. If we pay attention to the spread of price, which is how far the candles and wicks move down each time. I don't usually use regular candles like Dozi's or something. I like just the volume and the general trend of that. Helps me understand, because every time there's a red candle, there's also basically a blue or a sale volume bar for supply here. So there's a significant amount of supply that came in here. And on the next bar, we saw increased demand. And that price spread actually outpaced the previous price spread of this big sell structure here. So as you can see, these two bars differing, and then the significance of into the sell before that, followed by we overcame all of that sell pressure and downside congestion with less supply. So this is what's known as effort versus result, basically. How much buying needed to go in to push the price higher. So we're kind of right on the verge of that now. So on the daily time frames, it looks like we're about to turn over and go lower, but again, remember for the RSI, we're already kind of near the bottom anyway, so can't go too much lower. And I think that what we're going to end up witnessing again is this inverse head and shoulders that comes across like this. Boom, 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 boom. And this will be the bottom, and it's going to induce into the jump across the creek. So it's a little bit early on to tell. Again, it's better to build confirmations after you get sighted out of the creek and start to make you can make a higher confidence play if you're using leverage. But if for instance in spot, so the risk to reward here is still pretty good. Maybe just stop losses potentially, even if you're entering a spot position, because there's a lot of room for downside still if for some reason the market structure fails. Now, I don't think that's the case, but just when we're up this high from the beginning of the accumulation cycle, it's better to just think more defensively about capital, because otherwise you could just turn around real fast and be like, wow, we're back down at 15 grand. Now, again, I don't think that's going to happen, but just you can think more defensively in these positions, I guess, is the best advice. Oh, hello, Iris. I want to buy more Solana, she says. Well, let's take a look at Solana. So again, the previous accumulation range for Solana was amazing. This is a 24-30% spread, very beautiful market structure. This, on the other hand, is not. These are very deceiving, and it's usually end of the market cycle type structure that this is providing. So I think if we're right about this, that we do jump, or let's turn the bear claw back on because it'll be helpful, and we'll turn the VPVR on too. So notice we're kind of right on the top. We peaked out of the bands. We're just testing the 200 simple moving average. This is kind of the area I thought we would return into, maybe a little bit lower. We could sweep for Solana like 138. But that market structure turning around will be bullish. So again, let's look at all these on the 12-hour here and get rid of all the bottom data for a second. So again, we've jumped. We're kind of trying to push out of the band, staying above the 200 on all the assets right now. You're getting basically an identical picture. So the big question now is, do we get this horizontal reaccumulation range right at the back of this trading range, basically, similar to what we saw in early December, November, something like this, where you see a horizontal trading range that builds as a jump across the creek, right in the middle of the box. That would be amazing. That's the highest confidence probability. So yeah. Thoughts on Avalanche TO? Okay, so Megan says, thoughts on Avalanche TO? I bought TO at $2. Nice, you're up decently then, right? On one of my favorite projects. I don't think of selling before $200. Is it too unrealistic? You know, Avalanche has not been good at their marketing. Sometimes I wish I could hang out with these companies. And every now and then I try to ping them. I'm like, yo, bros, you do mushrooms or something. Like, it's like that. It reminds me of that Apple ad where they're just crushing this new. Did you guys see this new Apple ad that came out recently? I'm going to actually look at this, because if you haven't seen this is ridiculous. They're just so tone deaf. I don't know if they like how many people, this is the local Costa Rican news. I wonder how many people thought to like went through this process. So this is the new, and they go through and they crush all this culture stuff, and they're like, hey, iPad. I don't know who, like, what part of the marketing team is like, hey guys, I got a brilliant idea. You know, we're like this company that basically allows, generally, I mean, I use a Mac because it's been great for music and video. That's Macs generally have been for artists and creatives. I bought a Mac the first time because I could use Ableton. I was like, oh, I can record music here. They weren't really able to edit video yet. Anyways, this is kind of what Avalanche reminds me of. It's a great product, but their marketing fucking sucks. They just don't get it. In fact, if you do, all they have to do is just play it in reverse. Like this, if all of a sudden, like, oh, look, went into the new iPad, and then all of a sudden, out of the iPad came all of this fucking awesome stuff. Like literally, they were so close to making this ad dope. They just had to play this shit backwards. Like, Hold on, like here, let me show you this. Look how close they would have been. Like, hey, look, it's an iPad, the new iPad Pro. We put it down, we smash it, and from out of it came their last 60 years of culture. And anything you want to do, from art, music, paint, draw, send, play video games, do math, whatever, we've got it in the iPad. That's all they had to do. That's it. So crazy. Anyways. Oh yeah, what was the point of this? Avalanche's marketing team sucks, but their technology is great. It's kind of remind the new M4 iPad's tech is amazing, but the marketing team sucks balls. So tone deaf. So that kind of sucks. Where would I say? You could wait. We're gonna go higher. I think we've got one final run to this bull market. Even if it's not right now. If it's not right now, we could come back down a little bit lower for pretty much everything. But we're gonna get one last big sweep up after this from wherever it is we go back down to. And again, I think we're probably pretty close to the middle of the box reaccumulation range. That's kind of what it's looking like here. Oh yeah, and look, let's go take some data right now. Perfect. Look at how strong render is here. This is starting to perform very, very nicely. So I suspect that's what's going to do. You're going to see a middle of the box reaccumulation range, and then everything's gonna run. Yeah, looks good. I was watching Bonk as well, but render is just clearly so strong. I mean, render here is already back up 11 to 12%. Near, not as much strength as you can see here, but on the smaller time frames, it comes through a little bit. Not much though. Okay, so this is actually a kind of a good lesson too. Here we are in the smaller time frames. This actually still looks bearish. I would like to see some more confirmations on the smaller time frames, technically, of the trend shift, because for now we're still stuck below even the 15-minute. Some nice trend shifts above the 15-minute would be great here, because this looks distribution, redistribution. This looks like a type of accumulation. You could even make an argument for some type of really small inverse head and shoulders that pumps us back up to this area before going higher. So we could see this kind of complex horizontal reaccumulation structure. Hopefully that all makes it strong. Let's take a look at the 15-minute here on fetch too. So fetch and near near is actually a little bit stronger. So I've kind of got them ordered in here right now. Render, near, and fetch are kind of the strongest. Sol is up there too. It's up there kind of with near. They're both made 30% jumps here. Render being the strongest. Fetch actually as well was pretty close to 30% on that previous upcycle swing here. Yeah, 30%. So basically fetch, Solana, near are very similar in strength to each other right now. Avalanche is a little bit farther behind. Again, we're just not seeing that structure, but again, you could make the perfect argument for an inverse head and shoulders here, about to complete kind of a small reaccumulation. Now, after whatever it does after this, I'm going to be very, very cautious with the market, because these are not long-term reaccumulations. These are very short for whatever they are, and we've seen a lot of weakness in Avalanche already too. So depending on what happens next, I'll be keeping a close eye and being defensive. But everywhere it looks like we're going to get more upside, I think. Yeah, I think the idea of inverse head and shoulders on pretty much all the assets looks like a high probability type of change. And the way I see it is through the falling of the accumulation channel into horizontal reaccumulation at the backup phase as the finality, remembering that right now we're so high above the market itself. You're acting as basically a final LPS and SOS phase before the kind of the last breakout. But yeah, just be careful again, because we've bumped right up. We haven't been able to close above on the larger time frames for like the daily. So that's kind of the real kicker here we're looking at, is a trend shift on the daily, which is what we're kind of watching for now. On the daily here for Solana, I think it looks pretty obvious, which is what we want to do is see this trend shift bring us back above the EMA, start to get some nice one of these like this, and then all the way up to 183, because otherwise it's just going to come all the way down to like 97 to 110 bucks. And this is going to end up being an up thrust after distribution, and then you'll see a reaccumulation range here, hopefully, or distribution. So at the moment, still looks bullish, but this is the moment where the jump across the creek could become up thrust and then distribution, because phase C is the same where you get a spring, and then where you go into phase D. For those of you that don't know what I'm talking about, I've got a bunch of visual stuff that we send out in the private group that helps teach this as your first kind of entry into all the classes, because I think it's the best way to identify the market structure. Again, reaccumulation is the hardest here, so no trying to get it perfect. Can we get an all-time high prediction? Yeah, I think something like 120 to 140,000 seems like a relatively good guess. There's a few things for that. Yeah, look at the trend shifts here too. Oh, this is on Solana. Sorry, I meant to go to Bitcoin. Let's go to the weekly for Bitcoin. Let's turn the bear claw back on too, because it's so nice. Yeah, okay, so here's a great example of what I mean by the trend shift. So here, as we jumped across the bands, we came back down to tested, and as soon as we started to close above the bands again, that's when we took off. And that's kind of what we're looking for now, but on a bit of a smaller time frame. Because when you compare the bands up here, this is when you're in danger territory, because we're so far away from the EMA down here, effectively, right? Where we left like the comfort zone area, which is around 39,000. So when just be aware that when you're up high from the EMA bands, there's more risk aimed to the downside, limited to the upside, right? So here it's about 50-50. If that's true, if we go up to 120,000, that's only 100% from here, right? To 60,000 twice, 120,000 twice from here. But at the same point, if we come down to 30, that's exactly 50% from here, which means you'd have to make 100% MAC to make the same amount. So there's almost an equal risk to reward relationship here, which is also why I ascertain you should use more risk than back in October. I was like, buy fucking everything. So that's about it. I'm watching super close. The positions are looking good. I think we're going to get some small tests here. Render just looks so freaking strong here. It's so impressive. We just watch. Should I just put on music and we just like watch the charts? We should chat back with you guys. So 120, 140,000. That's, I think, where we're going to go. Maybe some wicks of higher, but I don't see us going too much higher than that. I mean, I guess it always goes just a little bit lower and just a little bit higher than I imagined. So let's go, 160. I've always been a little bit conservative. Could you check Jesus coin? It's still... No, I don't want to look at Jesus coin right now. So basically the S&P 500 as well, I guess, is another great way to look at this. It looks like the S&P 500 is going to get some more downside test. We're probably going to open up pre-market tomorrow with some of that downside already completed, basically. And then where we go to, I think, is key, because that will kind of help us understand. On the lower time frames too, you can start to see what that might look like. Yeah, somewhere around... Excuse me. Yeah, somewhere around here, 512. But yeah, it's all looking bullish. And on the 5 minute right now, you're here. This is good too. On the 5 minute, we might be witnessing that trend change right now. Look at fetch trend change up on the 5. Same on the 5 minute here. Near is trying to test within that range as well too. So if the 5 minute is turning over here, we might actually be hitting the bottom of that now. Anyways. I hope you guys enjoyed tonight's episode. I hope you find it valuable. We're right in the curve. Everything looks bullish. The 5 minutes is turned over. I think we're probably good to go. I think that was about the test. Pretty damn close, at least. Just as long as you know what your error of margin of error is, then you'll be good. You'll be good to go. Steve with the Arcane Bear. Thanks for joining us. Just a quick episode. I thought I would do that to help round out my thoughts. I'm bullish. The 5 minutes looks like we're going to close bullish. Looks like we're in reaccumulation range. I'm going to use a stop loss here for some of this stuff, just in case, because why not? Right, because the risk to reward relationship right now is basically like 50-50. There's equal room for up and downside in the middle of the market. I think we're going up because we're in the middle of the market, so that would make sense, but just to be careful, because I've been confused about shit before. Let's do something else. The Arcane Bear. We'll see you guys on the other side. Thank you for joining us.